Good morning and welcome to today's video. Now I believe all the viewers who are coming in after watching the previous videos in the prior days of Bank Nifty and Nifty will have made a good amount of money. This is as the indexes performed exactly as said for both the option buyers and the option sellers. Now today we'll be taking a look at the Sensex, but before we delve into Sensex, as I'm recording this the night before, now when I'm recording the video I'm seeing that the American market is right now down, and that is primarily due to the beige book report I was discussing in the video of yesterday. Now the beige book report has basically come out and it's a lose-lose for the market. I say this as some of the factors are positive and some of the factors are negative. However, the issue which the beige book report has arisen is that it has confirmed that the Fed doesn't have any real reason to lower rates in the summer, and that is going to naturally hurt the global markets. So due to that, there is a risk of selling as people want to reduce the exposure, and that has resulted in the American market performing how it has. Now coming to our markets have had a rough week basically, whether you look at stocks or whether you look at indexes. Now, due to the rough week we have had, I believe tomorrow is going to be a trickier trading session, as it will not be as clean as we have done in Nifty and Bank Nifty in the past 2 days, as I expect more box range sideways moves, and then for option buys it's going to be a catch-22 situation. Now why I say that is, if you're trading the 31st May options, then even if you enter an in the money strike, if by chance you're going to box range mode, how I expect for a good part of the day, then the decay is going to kill you and your probability of a loss has gone through the roof. Whatever you do, you're most likely going to lose in a big way, on a box range move on expiry day. On the other hand, if you decide to go and buy options of the next strike of the next week, then an issue comes is due to the prices being so elevated. This is as, for example, when I was trading for the Nifty expiry yesterday, when I was shorting the indexes, the certain strikes I entered in the options expiring yesterday, and the certain strikes I entered in the options expiring on 6th June. Now the 6th June options were way more expensive, and they were nearly 3 to 4 times the price of the margin required for it was 3 to 4 times due to the price being way higher. So the same issue comes in today's Sensex thing, and it will also be carried on in the other 2 indexes. So I will personally be reducing my volume today's because of simply the options for an option buyer have come more expensive, hence that takes your risk as an option buyer way higher than it normally is. So if let's say you're going to trade 100 lots, I would say you reduce to 30-40 lots. So the risk is higher, and you're basically risking then a similar amount of capital as you usually do without carrying the extra burden. Now in terms of an option buyer for the Sensex, as long as we're between 73,750, which is this support here, and 74,320, I don't believe any option buyer should attempt this zone. This zone can be an unending box range for the day and can cause a lot of problems. On the other hand, another thing option buyers and option sellers will have to monitor for the Sensex today is that if you see the past 2 days we have had gap downs, and then we have had a bit of a follow through. Now today we'll most likely again end up having a gap down if the American markets continue performing how they're performing overnight. And if that is the case, then I personally will not be chasing that gap down. This is as we have come near very strong supports on all the indexes. So until we breach them, it will not be advisable to chase a gap down, and in fact it will be advisable to trade on a longer time frame than you usually do. Hence, I will only short the Bank Nifty, the Sensex, if number one it breaks 73,750, and post, let's say 15 minutes has passed, let's say 9:15 the market opens, post 9:30, because I do not want to get caught on an expiry day in that in a gap down that is not strong enough and it gets a V-shaped move. So post 9:30, let's say if we break 73,750, and number one, the volume buildup is as poor as it is right now. As if we look at the volume buildup below, we can see that it is severely bearish if it stays like this. And the trend catcher, the black line is trying to cross the red line. If it gets rejected, these two factors have to come into play, and that's only when I will take a short if we break 73,750. If the volume buildup specifically is not bearish as it has to be, then I will avoid taking a short, and most likely it will be a false break. But if you break 73,750 with those factors in tandem, then 73,460 is the next target, and the primary target will be 73,200. Now if we break 73,750, then at 73,460 we can have a bit of a pause like we did in the Nifty yesterday, and then go to 73,200. However, tomorrow I'll take each support carefully, because options are way more expensive due to the elections, and we have had a good fall already, and it's a Friday. So due to all of that, I'll take it more carefully, as people might want to also book the profits they've made from shorts on the positional front. So if they decide to book, then those supports will cause a also upward swing, and we'll get that V shape. So you don't want to get also caught in that. Now on the option sellers perspective, I believe that if we break 73,750, that's only when the option sellers above 74,320 will be safe. Until then, I would not advise, unless you've got a stomach for heavy risk appetite, to sell 74,320 and above. To be on the safer side, I would say 74,550 and above will be an option sell that is rather safe. However, do keep tight stops, as I am saying that if we hit the supports and there is profit booking for the week due to it being a Friday, then you do not want to be caught up in a sudden spike which takes the option price through the roof, hits you as a seller, then it comes back to normal, and you understood that you got hit for absolutely no reason, as you got stopped out. So option sellers, to be more careful on the call side and also on the put side. Put side, if we hold 73,460 for example, then I believe 73,460 and below puts will be safer. So tomorrow I think both sides have to be sold. A bit of calls have to be sold and a bit of puts have to be sold, so as to keep a balance, and I expect that range to stay. So on the put side, below 73,460 puts, and on the call side, above 74,550. That's what I expect for option sellers in the Sensex's trading session. So that's it for today's video. Thank you for watching. If you did like it, then hit the like button and subscribe to the channel and click the notification bell.